All right, so I got a couple questions. I'll start with the first one, and it's very common, not just like among the people that we trade with on a regular basis, but also between just with all traders, and it has to do with the market has run so hot, and now we're back to all-time highs, and we've made new highs. So if you go look on your charts, go tell me the last time you see, and it happens, believe me, it does happen, but make a new all-time high, just go a little bit above it, and then what? Stop, stall, and fall? Not really. If you go look at the charts, you'll see there are instances where we do make a new high, stall, and come back down, but more cases than not, you make a new high, and you keep going, and you get to a new level. And the reason why I would say that so much of the bad news and the noise, even though very much of it is legitimate, because there are concerns, the economy is shit, inflation is up, it's still up, I mean, it's lowered, but it's still bad. The situations have not improved. However, the weighting in the indices with the best products, the best companies, that's how these indices keep moving up. So it doesn't really matter if all of the names have not participated or all of the names have not gotten to new all-time highs, because most names are moving now. So that'll help the indices a bit. But when the indices are made up of heavier weighted names that are beyond all-time highs or just extremely strong, then that's what they're reflecting. They're reflecting that. It's always the best companies that are pushing this higher. So it doesn't have to be the entire broad market for the S&P to move or NQ to move. It has to be certain names that have a higher weighting, and when they move the indices, and that's it. That's why small caps have lagged for a long time, because RTY is made up of a lot more small caps, growth names, and they've lagged, right? But SPY, SPX, CS, whatever you want to call it, and NQ, it's the opposite. Okay, you have the semis, which as a whole have been extremely strong. Even the ones that are lagging, like look at AMD, that looked like dog shit for a very long time. Look at it now. It's on its way back towards all-time highs, but it's been on a tear. What is it now? It's more than a double, or near a double, at least, from that most recent key low. So it's not something that we need to be surprised about, but more importantly, it's not something that you have to think about as if like all of a sudden, without any catalyst, just because we've made a new all-time high and it doesn't feel like we should have, that we need to be afraid that shit, now we're gonna plunge. It doesn't work like that, and it doesn't take much. I explained this yesterday. I don't know if people watched that or not, but we cool off some of the momentum continuously. So we get a couple days of pop, and then we get a week or so or more of trading in that range, and then pop again to a new high. And I don't know how, I didn't look at the charts today because I missed most of the afternoon. So I'll look at them after, but I imagine we close near the highs at least, just from the way that, you know, it seemed like it was gonna work out. So if that's the case, we're near the highs again, ready perhaps for another pop. And if we're not, we'll just range around a little more. There's nothing major happening right now that's going to be the event that's going to give us like a negative 3% day, a 4% day, because then you're looking at that like, okay, red flag, something happened. We had something that looked like a red flag, and I don't mean it's an actual red flag because our ranges were pretty tight. We didn't get anything like we saw a few months back when we were dropping. But even something like that, which, you know, in the moment seems like a big deal, bought up like nothing. That's where we are. We are market at all-time high, showing lots of demand, showing lots of strength. Getting a change? Anything can happen anytime, of course. But as it stands right now, history is on our side for hire, one. And we're not seeing anything derailing these names. We're not getting any terrible news. We're not getting any data that's so damning that people are fearful. None of that. None of that. We're going through wars. The entire time we've been going through wars. The Russia war started, and I'm pretty sure that was close to when they picked up this market and really took off with it. So many of the things that we think should matter, should have a bearing on the market, have an outcome that affects the market, they usually don't. Maybe a little blip, whatever the case, but more times than anything else, it's just the structure of the market. And as it stands right now, there's more demand than supply, so we just keep moving up. That's it. It's that simple. So until something does happen, or something does, whether it's a technical indicator, whether it's a technical indicator, whether it's something happening on the outside, maybe it's some terrible earnings, who knows, some data point that points to like a sudden lack of spending from the consumers, something that will affect everything. Maybe we do get some clarity on tariffs, and maybe it's not as good as they'd been hoping it was going to be. Who knows? It can be anything. But to speculate when or what, it doesn't help you. It doesn't help you in the moment. Now, in the meantime, what do we do? Well, it depends on what you're trading. Like, if you look at most of the mega caps, some of them went to all-time highs. Microsoft, Meta, they've been running, and they're still strong. Like Meta, okay, it's been faltering a couple days here, but nothing too concerning. Microsoft, hot as ever. NVDA, hot as ever. And then you have Google, Amazon, who are knocking on the door. They're hanging around. They're not losing anything, and they have earnings coming up. All right. Netflix, I didn't see what they did, so that might be a little bit of a bellwether for us. Apple's coming up. Apple, I still think there's a really good chance there that we get, just from the sake of everybody else is up, why wouldn't Apple be up? So good chance that it joins the party, but we'll see. But as far as other individual names go across multiple sectors, the names are strong. We have a lot of demand, and they're showing strength, and they're rotating into all kinds of different stocks. Now we have small caps involved. We have the uranium sector. We have crypto. There's just so much buying and so much money coming into the market and staying in the market. That's a good sign. That's a good sign. So I'm not thinking about when it's going to end, aside from from a short-term technical signal. Maybe there's an exhaustion signal, or it just needs to cool down, let some bands catch up, whatever it is. But I'm not even thinking about, oh shit, the party's coming to an end. You just can't think about that. I got late to the party because, I was like probably a lot of other people who were in a little bit of disbelief with just some of the levels that we hit. Sometimes historically they were not in the type of they were not the type of move where you expect to have a recovery from it, at least not back to all-time highs. But lo and behold, we're here, so can't question what already happened. It happened. But I'm not going to sit here and say because that happened, now we have to come back down. No, chances are because that happened, now they can keep the demand going and force people to buy in higher, and that's how markets go higher. So that's the way I'm looking at that. Now, some of the questions that I got also had to do with individual names, because yes, we see the rotation, and it usually happens from some of the names that have run really hot into names that are lagging and back and forth. So I think a lot of the really good names that have made big moves, maybe some of them do have a pullback coming. Like we can look at right now, Rocket Lab and Joby. Some of these companies have had really, really unbelievable runs, and there's a good chance that they get a pullback, probably short term, and that just might mean that they jump in, maybe something within the sector, like you look at the Archers. You gotta be kidding me, I'm getting a train. Anyways, so when you look at those names, maybe you get some intersector rotation with that. or you just everything kind of gets pulled back, and then the reason we have some of these names lagging is because they're just not as good as the other ones. But even there, I just don't see that coming to an end. I just still see there's something there that's causing all this demand. So the question I got was, some of these names that are more liquid and they have more hype. When I say hype, I mean information on them, more attention on them. The market has given you information as to what they have in store for the future. So there's a certain expectation being set, and that's being priced in. On the other hand, you have other low liquidity names. You know what? I think I'm gonna pull a UE here. Maybe a 3-point turn. I'm not waiting for this train. Anyway, so other names that are lower liquidity, those ones there, unless you yourself have certain information about these names that give you conviction, maybe there's something that's coming down the pipeline, an announcement, a deal, whatever it might be, maybe they can withstand it. But usually those are the names that do get wiped quick. So how do you handle that? Well, if you have some conviction in it, I would say always be ready to take your profits, but maybe you keep a little more in there. Maybe you keep some in there for the future. So maybe keep 25% of what you have in there, and if you want to add back in the next type of cycle, then go for it. Now, first of all, until you see a reason, a technical reason to pull back, to pull something off on a pullback maybe, then you go ahead and do it. But if you don't see any reason, you gotta let it go some more. You just have to let it go some more. We're just in that type of an environment right now where sometimes things don't make sense, and we're nowhere near euphoria. Some of these names might have run hot, yes, but I just don't see it being at that position just yet. So again, if you have something in one of those names where you just know that these guys are involved in this sector, which is coming up big, and they have these contracts. Some people are really into that, and they have information on these stocks. I don't look at them. I see 3 letters, 4 letters, and whatever they are, they are. I see money going into it. It's good. It's good for a month. It's good for a week. It's good for a day, whatever it is. But a lot of times, those are the ones that if they only trade like 1 million shares a day, most of the time, there's a good chance that when they lose a little bit of that steam, and they don't have that attention anymore, they're not gonna maybe have a great time for quite a while. So I would say, me personally, I just take it all off those names, any of those hype names or spec names that are normally not so active, and they just had some recent activity and a hot streak. To me, I pull them off. I forget them. I literally forget them. Like, I don't even remember what the ticker is most of the time if you were to ask me a year from now what it was, because I've seen so many of those in the past just have a great week or a great month, and then never again. You could look at their chart history and you could say, oh, what happened there? I don't know. But most of the times, unless you have like some reasoning and look, you could probably find some of those names that have actually become better companies, maybe have some better earnings. Because back in most of the time, most of those little ones, they don't have I wouldn't even consider what they have earnings. They're reporting their debt, and they're telling you what they're doing differently, and nothing that really is overly pertinent for giving you the confidence to say this is a company that I want to hold for the future. That's just the way I look at it. If they become something better, you can always buy in long term at that time there. But for me, I say most of those names, like waves in the ocean, there's always another one. You can find those anytime. So if you have conviction for a specific reason, by all means, find a way to hold a piece of your position into the future, and good luck. If you don't have any sort of information for that conviction, then I would say forget it, drop it, and go on to the next one. All right. Now, for positions you have in names, maybe like a Joby, maybe one of those types of things, then yeah, I would look at getting to the point where where it's going to potentially get to a pullback. Now, you don't know what that's going to look like. So some people talk about hedging specific names, or, you know, trading around the core. Now, if you're going to trade around the core, if you're focusing only on a couple names, and those names are liquid and they have liquid options as well, because that's very important when it comes to options, is you want to make sure that you are trading the options that have a lot of eyes on them. This way you don't have to deal with aggressive and excessive spreads. You don't have to worry about, you know, not having buyers for your options at the moment that you want to sell them. You know, that's where you could potentially trade around the core in names like that. But me personally, you know, around the core type mentality is more like, okay, you're holding shares in, let's say, Unity, and you definitely want to like lean into some of that momentum with some leverage. That's when you go and you get some options, right? So that's how I would look at like trading around a core or something like that. I mean, you could just hold on to the shares and be fine with that and wait for that move to play out. In my opinion, those moves are just beginning, they're just starting. You know, you have to give them some leeway. And the ones that have already kind of been front running it, there's a possibility that they're going to get, you know, there's a possibility that they're coming to a short-term stall, you know. But even then, like, I would never say, like with Joby, for example, I would never say, okay, get ready to buy puts on Joby. No, that's not how you know how hard it is to hedge a name like that. Like, you might be able to just hit a home run guessing the right moment when that's going to happen, and you can capitalize on some puts, but that's very difficult to do. Okay, and that to me is just a matter of, it's just a trade, it's another trade. So kind of going back to even what I said yesterday, is looking for the best available trades. So whenever there's pullbacks, and when I consider hedging, I just consider you're able to make a good short play on the market, and I'll use SPY or QQQ, and I'll go about it that way there, and I won't touch my positions in certain names. Now, like good companies, you want to maintain exposure to them, obviously. So I would say those are the ones you want to keep a bunch, even during pullbacks. Likely reload when you see the opportunity for that, rather than, again, like I have Apple, I better get ready to buy puts. I better be ready to, you know, Apple looks like it's going to pull back, I want to protect my position. I don't know, some people do it like that. To me, that's just an exhausting way to even think about it, because you're dedicating all your bandwidth to like a few names, and it's like, I must stay with these names, and then you're babysitting it too much. And if you're babysitting something, it means you're probably going to miss out on the ability to just kind of like look at new opportunities with an open mind. And I hate that feeling, and I've been there. I hate that feeling of being locked in. So I've come to have major detachment from my longs, and even for how long I keep my long, just because of the way I've seen the market move in recent years. You know, like just kind of using that circle as an example, and even with Apple, just because they're, you know, similar price points and you're at 200 range. You know, Circle, what did it do? It made like a $50 move yesterday. Apple doesn't even move $50 in a year, many years. So, you know, you're thinking about it, it's like, oh, I'm going to be long Apple for a long, long time. And yeah, you can be, and it's a good strategy, and I've done that for a long time too. But you look at a name like that, like, oh my God, look at this Circle. I could have done this for 8 hours, and it would have got more than I got from my Apple all year long. Now, you would definitely not have a same size position in Circle. Not definitely. Some people don't think about it like that. I wouldn't have a size position in Circle the way I would have in Apple personally, just because Circle's a brand new company based on hype, and I'm not playing it that way. But the point that I'm making is, if you focus on trying to move your money with the momentum of the market, where it's going, certain sectors, certain names, that might just be the type of strategy that is an adaptive strategy just to the way the market moves these days, because it has changed a little bit. It has changed a little bit. Now, ultimately, for anything that you're going to be long in, you just have to be able to sleep at night. So if it's something where you're like, you know what, for 5 years, 10 years, I'm not even going to worry about this position, and it's a company that has good revenue, their earnings are good, they have a place in the market. When I say a place in our society, I mean like there's products that most people use every day, or services that they use every day. So it's not going to disappear tomorrow. Like Apple, as much as I can't stand the wokeness, and I think that they've got some tired type of product, they should be more original, a little more fresh. Doesn't matter, because I'm looking around and I see iPhone, AirPods, and all that bullshit. I have one. I'm talking to an iPhone right now. You know, I don't see that going away tomorrow, regardless of bad decisions, you know, tariff issues, China issues, whatever it is. Apple's not going away tomorrow. So I think about those types of things when I want to just put something away for a long time. You know, I don't see air taxis flying around right now, so I'm not thinking like, oh, I'm gonna replace my Apple position with Archer. No, I don't understand what those air taxi companies are going to do right now. I don't know what their place in society will be. Nobody really does. We can assume, but we don't see it just yet. So that's the way I look at things that I'm long term in. You want a little bit of spec stuff, definitely. But as far as, like, again, sleeping at night, knowing that like the 90% chance that in 5 years it will be much higher than it is right now, you got to give it to those types of safer companies, you know. But back to the trading aspect, we're seeing the demand for these small caps right now, and if we are just in the beginning of all of these laggards for all these years, and you can see the charts showing you that, risk aside, what's the better play? What's the better play? What would you want to happen, and what looks like it's going to happen? What have we been expecting to happen? So we've been expecting small caps to catch up to everything else. For years now, we've been expecting it. And it hasn't happened. It looked like it was going to happen, and it failed. It looked like it was going to happen, and it failed. And it became a joke, but it failed over and over and over and over and over again. It doesn't always stay the same. Something has to change. So where are we going to be now? I'm going to look at this from the perspective where there's a good chance it happens. It might not happen. If it doesn't happen, you reevaluate. But you should be planning, if you're going to play these small caps, you have to be planning that it's going to happen. So right now I'm expecting, now I'm not going to go out and jump and say it's happening 100%, but in my mind, I'm looking at the charts, I'm looking at the momentum, I'm looking at what they're buying, I'm seeing the flow, I'm seeing RTY, and I'm saying this time it should happen. So my mentality is that I'm playing towards the fact that all these names are going to be participating while RTY, it's making its way up and to a new all-time high to join the others. And then what happens from there? I don't know. Maybe it gets to all-time high and maybe it rejects. I don't know. But this is how I'm looking at it. And if I have to believe that the demand that we've been seeing in small caps, if I have to believe that is real, then we got a long ways to go. So likely even beyond all-time highs. Again, I'm not trying to guess anything. I'm not trying to guess. There could be, it's not even about the news. It's the way things are perceived. We get bad news and we don't know how it's going to be taken by the market, and the market moves. So I'm not even thinking about that. We can get news at any moment that changes the way we're looking at things. But right now the charts are saying higher. Right now the money going into these things is saying higher. Yes, we're going to get pullbacks along the way. It's normal. But I just don't see a reason to be preparing for things to be completely derailed. I just don't see it happening, okay? I've not seen this much demand in small caps in a very long time. Very long time. And yes, a lot of it's speculative. Yes, it's just a matter of maybe some people don't want to miss it. Sure. But it can get a lot it can get a lot crazier. A lot crazier. So don't pull yourself out of the game because you think that, you know, certain names have overachieved. Some might have peaked. Some might have done that. Yes, it's true. But I wouldn't be calling that anytime soon. So when it comes to your plays, I'd say the more spec and the more hype it is, especially if you're in options, definitely take profits and premium spike in the moments where you have strength on your side. If you're in just in shares, then draw a line for, you know, how much profit you want to maintain. You know, keep moving that number up as the chart goes up, obviously, but you know, you are in the driver's seat. So greed is what you're gonna have to start to contend with, and greed can mess you up because you want to get top dollar, and you know, you never like to see a number and then have that shrink on you. You know, doesn't feel good. But I mean, unless you're brand new and you don't know how this works, it's a stupid expectation to have. It's a very stupid expectation, because if you're selling the very top, other than the fact that you're saying, like, you know what, I'm going on vacation for 2 weeks and I'm not going to be able to look at this, I got to sell right this moment. If you're just selling the top because, you know, you think that this is the right moment to sell and you want the profit, then you're probably not making a proper trading decision, because you didn't get any indicators to tell you to sell at that time. So we're talking about something very silly in my opinion. And the last thing I'm going to talk about is another thing that I spoke about yesterday, which is trading strong names to the downside. Don't do it. You could try. You can be like a ninja and surgically approach certain plays, but the reality is, NVDA, for example, some people have been shorting it fairly regularly this entire time, and all-time high after all-time high. I don't know where it's going to end. I've seen flow into the 300s, you know. So, and that's just not that name, it's a lot of names. And I'm talking about you right now, Sev. Yes. All right. Yes, CVNA. It got where it is because of all the bears that tried to play it. And yeah, good for you having a successful trade on it. But I don't see the necessity with all the great opportunities we have around us. Even in some plays and some names that are weak, that are worth shorting, I don't see these names that are all-time highs as being the best option for that type of trade. So, I mean, you do you, always you do you. That's what I say. But, you know, at least you won't be surprised if you do fuck it up and, you know, you hurt yourself a little bit. You won't be surprised at that. So count on the strength. Count on the strength most likely to continue until we see something that tells us otherwise. And yeah, I would say breathe a little easier. Watch, I'm saying this right now, and I'm putting this video out to you guys. Sorry, just pulling into my driveway. And then all of a sudden, I know what's gonna happen. I'm gonna get just an absolute pullback. CVNA is gonna be down $145, and Seb's gonna be like, "I told you so." And if that happens, I'll congratulate you, but you had no good reason for it to happen. That's what I'm trying to say to you. We're not in this I think, I hope, what if sort of approach to the market. We're in a, this is what it is, this is what is probable, this is what is most likely, and then we focus there. And then when we get new information that says, hold up, maybe something's changing here, that's when we adapt. When I say we, I mean me. That's it. And if any of you want to talk more and share more of your own opinions, I mean, I'd welcome it. I'd like it. But that's why I say we, because usually it's kind of like what I'm saying or what Alex is saying or what Gab is saying that reflects, you know, what we're thinking in the market. And then Sev comes in and throws some curveballs, whatever. And honestly, some of you guys who message me, who DM me, you have good things to say. I would encourage you, and even the ones who don't, the ones who just, you know, are just there behind the scenes, I would encourage you all to just share something, because it is nicer to have more participation. It is nicer to have more perspectives. Like nobody, perceivably, some people know more than other people, but believe me when I tell you, sometimes there's something there that you might be seeing that other people don't see, or you're looking at it in a different way, and you might be right and everybody else might be wrong. So I do appreciate every opinion. I do appreciate all of the people who do share any sort of idea, even as cockamamie or crazy as it might be. It's just nice to get a kind of a mix of opinions and thoughts and trades into the room, but also even for the fact that trading, listen, I can go and be in another community. I have a couple communities that I can go join and be participant in and get more talking, but I find a lot of them get noisy, and I like a little bit of noise. But more than anything, trading is a social thing, because you're sitting in front of a computer and you're bouncing ideas off people, you're talking about things. So that's why it's nice to actually get some feedback and some back and forth with other people. So I don't like too much noise, and that's why I'm not in other communities actively, but I like a little more noise than what we've got. So I would encourage everybody to kind of like step it up a little bit, in the sense of just sharing some more ideas, or a little more, even if it's a simple comment. Fuck, share a joke, I don't care. Just because, like I said, it's not just the trading, it's also the social part of it too. Okay? Anyway, another raw video. Definitely not doing myself any favors here with these weird angles. Got this bloody magnet thing on my dash. But again, it's not about egos or beauty competitions or anything like that. Okay? So I probably missed some of the stuff that you guys asked me. I probably didn't talk enough about certain things, and I probably talked too much about others. But I'm not doing it more than once. Okay? So you guys have a good one.